let's start off with what we mean by reparations. Now, in this context, we're talking about efforts to repair the harm caused by slavery and its continuing legacy. Reparations efforts recognize that the U.S. became the wealthiest nation in the world as a direct consequence of using enslaved labor to dominate the textile industry. Representative Cori Bush's reparations resolution estimates that enslaved Africans produced 222 million hours of forced labor for the United States from 1619 to 1865. That's the rough equivalent of $97 trillion worth of work. The official end of slavery, except as punishment for a crime, was not the end of policies that kept Black people from accumulating wealth or ones that extracted the wealth they managed to gain. After the Civil War, thousands of Black men were rounded up as criminals so states could lease them to farmers and private businesses to perform unpaid manual labor. Their crimes were violations of Black codes, laws passed to maintain racial hierarchy. In rural Alabama, for example, changing employers without permission, false pretense, and quote-unquote selling cotton after sunset were all arrestable offenses by 1890. This leasing of human beings, a form of slavery by another means, continued through the mid-20th century. It is not a stretch to think of today's incarcerated individuals as a contemporary extension of this history, since more than half of the 1.5 million people being held in federal prisons work for a few cents per hour, often for private corporations. The question of how to fund reparations comes up again and again. And Professor Barrett Friend is going to tell us about a paper he recently published that proposes a novel idea to address just that issue. His proposal includes using the quick capitalization of a massive reparations fund could successfully capitalize a multi-trillion reparations fund in less than a year.
So in my proposal, I recommend that we capitalize a multi-trillion-dollar reparations fund by requiring publicly traded firms that are listed on U.S. exchanges to remit a share of their firm to this fund. Also in the private sector, we see companies choosing to compensate high-end executives primarily with equity rather than cash. And that's because both parties appreciate that there is a way to create value for both parties by using property other than cash. So with a corporate income tax, and I do support the corporate income tax, but one of the limitations is that generally both shareholders and managers conspire against the IRS to pay as little as in corporate tax as possible. They have aligned interests typically to reduce payment of corporate income tax. With the reparations fund, because the shares held by the fund mirror all of the outstanding classes of stock that 98% of other shareholders have, you have aligned interests between other investors and the reparations fund. So games that a company might try to play to diminish the value of what is held by the reparations fund would also hit those other 98%. And so you would see some enforcement just by those investors to make sure that the fund had a stable value.
As I was reading through your paper, I must have put about 10 check marks where I said, this is exactly what public pension funds are like. It looks a lot like the kind of things that they're used to already. And I think that's the part that really, that's one of the factors that really just kept jumping out at me over and over as I read your paper. And if there's one takeaway for the audience to take from my comments is how amazing the proposal is, but also how unremarkable it is to implement. And I know that sounds like a contradiction in terms, but let me explain here. What a pension fund has to do is they manage and hold equities, the kind of equities that Jeremy was talking about that would fit the bill for a reparations proposal. This proposal sets up this fund to be a powerful advocate in the decisions of corporate America without having a controlling influence.
A part of the goal is about self-determination, that it's essential that the community impacted by slavery and by the compounded harms of racism after slavery is the community that gets to decide on how this fund is run and where the fund money goes.